I'm Priscilla Barrera with the Investing News Network, and here with me today is Iola Hughes, who's Research Manager at RowMotion. Iola, thank you so much for joining me today.
Thank you for having me.
So just to start, since it's the first time we're speaking, would you just give a brief overview to our audience about what you do at RowMotion?
Yeah, so RowMotion is a consultancy and advisory across the battery value chain. Our main focus is on the downstreams, looking at the demand side dynamics, so focused on the EV and stationary storage markets. My role as research manager is working across those two markets mainly. I do spend a lot of time on the stationary storage markets in particular, but yeah, essentially working across that whole downstream value chain and providing data and forecasts.
All right, so today I wanted to talk to you about the electric vehicle space. Has your forecast for EV sales changed since the start of the year, and what have been the main headwinds impacting the EV space so far in 2022?
Yeah, so that's a really interesting one. This year there's been obviously a lot of turmoil and disruption in the EV market. At the start of the year, we were forecasting the total vehicle market at around 10.1 million. As we look to kind of the end of Q1, entering Q2, we actually downgraded our forecast slightly, and this was on the back of a number of quite significant headwinds, namely kind of being Ukraine conflict, having an impact in the European market. There were some kind of really short-term impacts there as well, particularly around things such as wire harness production, which takes place a lot in Ukraine. So we did see that having quite a big impact initially. There was also some impact on neon production, which is used for semiconductors, and that added to the kind of wider disruption within the semiconductor market anyway. And then, of course, in China, the big lockdown in Shanghai had quite a significant impact on production and what was coming out of China. So we did actually downgrade our forecast slightly at that point. As we've progressed throughout the year, we've seen a lot stronger recovery than anticipated, largely coming from the Chinese market and significant ramp up of OEMs there. And actually, we're now at a point where that forecast is almost back in line where we were at the beginning of the year. So we should have never really changed it.
And we did see raw material prices go up quite a bit, and we've seen OEMs increase their EV prices as a result. Do you think this is a trend that will continue into 2023? And will OEMs be able to continue to pass on these costs to consumers? Will that impact mass adoption? What are your thoughts?
Yeah, definitely. We have seen quite a few price increases over the last year. It was really interesting in the Chinese market. Those step-ups, we produced some kind of charts and data on how those price increases have been taking place. We have actually started to see some prices come down a little bit now, which is on the back of some shifts in raw material prices. Ultimately, it is very difficult to keep on passing price increases on to the consumer. But given, I guess, the wider economic situation at the moment and with inflation and all those issues, it is very difficult to keep vehicle prices at the same level. I guess one part of the whole system which makes it a bit easier for OEMs is if things such as tax subsidies or incentives continue in the market, then it does make it easier for mass adoption. The other thing which is, of course, beneficial to costs over time is as OEMs ramp up and kind of get to mass production, then economies of scale do start to kick in and vehicle prices should start to come down there as well.
And are you seeing that a continued rise in consumer acceptance of electric vehicles? And you just mentioned just these macroeconomic factors. How do they impact consumer choice when going and looking for a car?
Yeah, definitely. I think consumer acceptance, just almost understanding of the EV market is increasing all the time. I think a big thing, particularly in the European market, has recently been around rising fuel prices. So if you go to the petrol pump and you're suddenly paying a lot more money than you used to be, that's maybe making people consider, okay, maybe I should look into an electric vehicle. So that's definitely driving it. The other thing is coming from the OEMs as well. As they kind of, I'm sure you've noticed on adverts and any advertising that you see, it really is that push for electric vehicles, kind of across the world with that. So I think almost just the awareness and that increased level of marketing, I guess, is leading to a higher level of acceptance as well.
All right, and an interesting trend that we saw this year has been the Chinese entering Western markets such as Europe. How do you think that will evolve next year, I guess, given the current geopolitical tensions and dynamics?
Yeah, I think definitely we've seen a real step up in Chinese OEMs entering the European market. And we are going to continue to see that or increase over the next few months. The likes of kind of like BYD, NIO, and XPeng have really stepped up their European presence. I think mainly the reason they're going for Europe first is because they're generally looking at markets where there's already a high level of penetration and market acceptance, which is giving them an opportunity to access those markets. So, for example, if they go towards the Norwegian market where you've already got an EV penetration up at 70%, it's going to be a lot easier to kind of introduce their models than going, say, for the US market where you're closer to a 5% penetration rate.
Obviously, Chinese exposure is not only coming from electric vehicles, but also from battery manufacturing. Do you expect legislation to support these investments?
In the Chinese market, is that specifically? I mean, for sure, there is strong support from the Chinese government for battery manufacturing. Just in terms of kind of announcements on the Gigafactory side in the Chinese market, it really is quite impressive. We have a few Chinese analysts in the team, and they're keeping a close eye on what's going on in that market, and they almost laugh when they see an announcement in the US or the European market, because they're like, oh, we had 3 of those in the last day. So it really is a whole level above where we are in the Western markets, I'd say.
All right. And what about the Chinese companies entering battery manufacturing in regions like Europe? Will they support these companies?
Yeah, definitely. We are starting to see that more and more. So CATL in Hungary is quite an interesting one. We also have Eve Energy announcing their European facility. So we are definitely going to see that increased presence of Chinese battery manufacturers in the Western markets as well. The US market is obviously a really interesting one for China. CATL earlier this year announced some plans for US manufacturing facility, and then kind of on the back of Taiwan and some issues with around that, we have seen that announcement drawn back somewhat. I think it will be really interesting to see how that kind of evolves over the next 6 months to a year in the US market, particularly with the Inflation Reduction Act. I think until we see the guidance come through from the Treasury, which should be in the next few months, it's very difficult to pinpoint how that investment will play out with those Chinese battery manufacturers. So yeah, we're going to be keeping a close eye on that. And I mean, it would make sense for Chinese battery manufacturers to enter the US market, but it really is going to be waiting to see how that does play out geopolitically as well.
And as we look forward to next year, what are some of the upsides you're seeing in the electric vehicle market as a whole? Will we continue to see growth in all regions? I guess which ones are struggling the most?
Yeah, that's really interesting. So I think in terms of upside, it again is really a Chinese story. I mean, if we look at kind of the ramp up that we've seen from BYD this year, they've had a close to 300% year-on-year increase in terms of manufacturing capabilities. If those OEMs can start to export into the European market as well, we're going to see that presence of those Chinese OEMs definitely increasing in other markets as well. I mean, as we look to next year, we're going to see more models coming online, more production facilities. So really the upside is strong for the EV market. There do continue to be issues in the supply chain. Semiconductors continues to be an issue facing both the EV and the stationary storage markets. So that's going to be interesting to see how that plays out.
I also wanted to touch on battery chemistry choice from OEMs. What trends have you seen in the past year, and do you expect any changes as we enter 2023? Many of the people that are listening to us today, they're looking at raw materials like lithium, cobalt, nickel. So it will be interesting to see what you're looking for next year.
Yeah, definitely. So when we think about the kind of 3 major regions, we see pretty significant different trends in how the chemistries are evolving. So just kind of starting with North America, at the moment that market is really dominated by NCA chemistries, so nickel, cobalt, aluminium, and kind of the remainder of the market being made up by NCM, and then a little bit of LFP coming through from imports of China-made Teslas, the Model 3 standard range. In the European market, it's much more of an NCM story, and that's really kind of dominating that market there, and then a little bit of LFP coming through. And then in China, the LFP story has really been stepping up this year. We're seeing close to 40% of that market being LFP cathodes, and then the remainder there really being NCM. I guess the main change that we have seen over the recent months is that step up and increase of LFP, and that's really on the back of developments in kind of cell to pack and improvements around that LFP chemistry. Going forwards, we definitely expect to see more LFP coming through in the North American. We're also starting to see cell manufacturers announcing plans to kind of enter the LFP space, who maybe historically have not been involved. So quite interesting this year, we saw LG Energy Solutions and SK On both announced they wanted to get involved in the LFP space and would have production facilities in the US market. I think initially that's really going to be targeting stationary applications, but I think the kind of step from stationary to EVs is going to be a very obvious one for them, particularly for those kind of entry-level vehicles where they can bring that cost down through LFP.
All right, and my last question for you today is, given the current macroeconomic environment and all we spoke about today, what do you see as the major risks for the lithium-ion battery industry today?
So I think always the kind of answer to this one is supply chain, getting enough raw materials out of the ground, getting enough of that material refined, and then getting through to the cell manufacturing stage. So supply chain issues and supply chain crunch is always going to be a big issue for this market. The demand is significant, and across kind of all the battery markets. So we are seeing that demand growing significantly in both the EV and stationary sector, which is causing or increasing this need for batteries. So unless we can get the raw materials out the ground, that's going to continue to be a difficult issue.
All right, thank you so much for joining me today.
Thank you.